What's up, everyone, and welcome to the Daily Macro Update for Monday, February 23rd. My name is Johnny Zerti. Interesting day in the markets, having a little bit of a sell-off here where there seems to be a lot of fear narratives going around, a lot of doom and gloom hitting the major markets, but not all markets, which, we'll be getting into here. And so, interesting to see this sell-off continue here. This might be at a pivotal point where markets start to roll over, similar to how we saw back during the bloody March of last year. We'll see how things carry on over, but we have a lot of stuff to get into. So let's go ahead and get right into it here. Actually, before that, though, if you guys want to incorporate macroeconomics into your investing process, make sure to check out the link below for our 6-week Macro Mastery Challenge, where it's not only learning about macro, but it's how to execute on a macro process so that you can continue to make gains more consistently and not fall short to a lot of the craziness that's going on in the markets, where people are hyper focused on just a few Mag 7 tech stocks as well as Bitcoin, and they think that it's doom and gloom when it's really not. It's just a capital rotation. And so if you go to the link below, it'll take you to our website, macro-optics.com. You can go ahead and click the start now. Check out our two offerings here, mainly the 6-week challenge. You can check out this video here that goes over all the details there. But let's go ahead and get right into it here. So as you guys may have saw on the news, typically we don't start with news on this channel, right? We always talk about the year-over-year rate of change when it comes to specific real-time price data as well as the hard macro data. But today there wasn't really any type of major, macro data coming out. And so this really was just a continuation of the trend that we saw last week, which we've already pointed out. If you guys haven't watched our Sunday macro wrap up, I'd highly recommend you guys check that out on our channel there on YouTube. But a lot of AI fears. We continue to see volatility ramp up. This is really just the narrative that people are clinging on to. But in reality, you're starting to have a flattening yield curve, which typically signals that you have growth or inflation or both at the same time decelerating. As you can see, this is at its lowest point that we've seen since mid-January of this year. And you can see that all of the performance metrics are in a flattening period right now. On a 3-month trending basis, it's a bull flattening, which typically a bull flattening is when you have growth, inflation, growth slowing as inflation remains sticky. Let me go ahead and kind of zoom in here on this one, just so you guys can see this here. Inflation prevents new spending. You get a hawkish pause where rates stay higher for longer. That's pretty much where we're at right now. So this is the yield curve phase that we are currently in. And that's really what's happening. And people are just clinging on to the different narratives that are out there. But it is interesting seeing a huge blow to something like IBM. This is down a lot today, over 14%. Pretty much the move on, let's see here. The move on February 3rd took this to bearish trend from neutral. And at the beginning of the month here in February, that was a clear signal right there. If we take a look at volume, that was on a large accelerating volume post earnings. So, this is really just the narrative, but we're just seeing a lot of the big tech stocks really start to roll over, And this isn't anything new that we haven't seen over the past few weeks, right? Because even though you have tech as well as consumer discretionary and financials in bearish trend, what you continue to see in bullish trend are things like energy, utilities, healthcare, real estate, and consumer staples, as well as materials and industrials, which industrials is looking like it's having a bit of a red day for a good buying opportunity here. And so, as this doom and gloom hits markets, you have to realize that there's plenty of sectors that remain in bullish trend. And I've been repeating this pretty much over the past month. But I'll continue to repeat it because I still get people messaging me like, hey, how can you say that things are in a bullish trend or that we're bullish right now? And the answer to that question is we're just continuing to see a rotation, um, not a full blown bear market. All right. So you not only can see that when taking a look at some of the different sectors in the S&P 500, but also as well when you take a look at specific real time ratios when it comes to looking at these different ETF ratios, specifically with this one right here, which is well, actually, we'll look at two of them. This is the um, large cap versus small cap uh, ETF ratio. And as you can see, these large caps are, um, losing compared to small caps. And so you can see how this is a one indicator of a sector rotation there, right? When this is bearish, this is more of a broadening rally. And then when you take a look at something like market breadth, which is the percentage of stocks in the S&P 500 above their 200-day moving average, over 65%, nearly 66% of all the stocks in the S&P 500 are above their 200-day moving average and accelerating. This is completely different from what we saw back a year ago when you had the large tariff tantrum sell off, which was where everything was going down, right? Look at what market breadth was doing at that time. The lowest it got was, you know, near 18%. So if market breadth was decelerating while at the same time all this doom and gloom was happening and then credit spreads were widening and all those different things, then I would be more fearful of a more broad correction in the markets. But market breadth is fine. Credit spreads are fine. Liquidity is tightening, but it's not at a point that it's spooking the bond markets entirely. And you continue to get a large acceleration in prices from nearly half of the sectors in the S&P 500. So this is not a bear market. This is a capital rotation from large cap tech into small cap value as well as cyclicals. And that has really been the story that I've been repeating over the past, I don't even know, month or so. And I'm sure you've heard other people talk about this as well. But it is interesting that only a few people even, acknowledge this. If you're just paying attention to the mainstream media, or if you're just paying attention to, you know, um, engagement farm Twitter accounts, then you're not going to be seeing this stuff. And I think it was 2 weeks ago or last week, at the beginning of last week, where all of the Mag 7 stocks went bearish in our model. You continue to see a further decline in Microsoft, Tesla, Amazon, JP Morgan, Meta. Apple's trying to hang in there, but it still remains bearish. Google had a nice out on Friday. Hopefully you were selling into that and getting out of that one. Broadcom and Nvidia. Nvidia is trying to get back to bullish trend though. So, that's what we're seeing there. Also, too, Bitcoin continues to be continuing its bearish trend here. I don't know who keeps trying to call the bottom on Bitcoin, but there's really no reason to do that. And with the conflict in the Middle East rising, um, you're getting more of a rotation into precious metals again. So gold, silver, Gold and silver are looking like they're about to have their second leg of this rally. Really, gold has been having a rally for the past like 3 years. Yeah, gold really started to take off in end of February of 2024. So this is over a year long bull market in gold. But silver and all those precious metals look like they're about to continue their takeoff here. DBP is the precious metals fund. If you don't want to just buy gold or silver, this is a ETF that you could buy or a fund that you can buy. But really, the volatility index of the S&P 500 continues to make new highs. And when volatility is rising, that is a tough time to try and buy dips and things, right? You have to be very specific. But in the S&P 500 itself, if you are trying to just time bottoms and do that while the VIX is, accelerating here, then you're going to have a bad time, or you're going to have a trickier time, right? So these volatility spikes that we see, those are times where you don't want to have a bunch of exposure, because that's where you have large price declines. So that is really what we're seeing in the markets. But credit spreads, bond volatility, all still remain, in bearish trend here. So there's not any crazy, warning signs of credit risk, right? But it's just a continuation of this capital rotation. Interestingly, when you take a look at something like EEM versus SPY, this ETF ratio right here, this is looking at global liquidity or emerging markets versus the S&P 500. When this is in bullish trend like it is right now, that's typically a signal of capital rotation out of, the S&P 500 and into emerging markets, other foreign equity markets. And so, yeah, I mean, this is really just, weak dollar, global boom type of liquidity environment. So that's what we're seeing there. What else? What else? What else? When it comes to liquidity, let me see here. Where is I'm trying to find no. Mm-mm. Here we go. So this is what I was looking for. Here is the amount of United States Treasuries that the Fed is holding on their balance sheet. So obviously during quantitative tightening, this was declining. The rate of change slowed down 2 times. That was them dialing back QT. And now, obviously, since the new year or mid December, during the December meeting, when they said that they're actually going to be doing bond or bill purchases, we finally see the asset level expansion since then, but it really hasn't been too much. But that's a pretty rapid acceleration from 4.2 trillion to 4.3 trillion. So pretty much since the beginning of the year, the Fed has purchased over $100 billion in U.S. bills or Treasury bills, right? Government debt. And this is because the reverse repo facility is all dried up and bank reserves continue lower. And then also, too, because we're continuing in this high interest rate environment, the government has to increase cash reserves in their Treasury general account. And so that's also tightening liquidity. And this is why, we continue to see liquidity remain weak. Bitcoin doesn't like that. A lot of liquidity sensitive assets don't like that. That in coordination with, some of these market fears that are happening right now, is also contributing to volatility spiking. But again, this isn't a broad, market crash or anything like that. This is a broadening rally in specific sectors. So, interesting comments from some Fed governors today. Fed Governor Waller, I've never seen the economy being this strong and it doesn't increase employment. Well, that's because labor supply is completely broken. And, you have a lot of these different companies not hiring because of the onset of AI. And Governor Waller also said that the good news about jobs is just 1 month. We need to see multiple months of this, because if we don't see that and it continues to decline, then they might cut 25 basis points in March, which I don't think is going to happen at this point in time. But that's at least what Fed Governor Waller is, signaling to the markets there. But yeah, taking a look at the heat maps here today, I mean, pretty bloody in terms of equity markets. Commodities look pretty good. Check out the commodity markets: gold, silver, oil still hanging in there, gold miners, gasoline, green across commodities, equities in the red here. Yeah, tech continues to sell off. Crypto as well. Yeah, pretty much the same. We talked about at the end of last week when we saw green and all these things, how it was a good selling opportunity. Did you chase that green bounce, or did you sell some into that? Be honest with yourself. And if you weren't selling into the strength on that bounce last week, you got to get better. All right, let's go ahead and get into some questions here. Target rate probabilities for the March meeting right now accelerated to 96%, which is up or down slightly from yesterday, but still remaining pretty elevated. I love opening up Fidelity and seeing plus 1.8% in my entire portfolio with the broader market, while the broader market is down. Well, it's actually the index and things might be down, but it's because of the concentration and just a handful amount of tech stocks, right? The broader market is actually expanding, but I'm glad to hear that your portfolio is up. Rear view mirror live music R7870. Great to hear it. All right, let's take a look at some questions here on Instagram. How's it going, everyone? Hope everyone is having a fantastic day wherever you are. Let's take a look at some of the different comments here on TikTok, and then we'll go ahead and wrap it up. All right, not seeing any type thoughts on REMX. Yeah, I mean, it looks similar to gold, right? Rare earth metals. It is accelerating here on price on lower volumes, so this is technically a bearish divergence, but it is bullish. It's probably just a good time to sell some. Is QE happening soon? It's already been happening. QE has been going on since 2023. It's just in a different way that people are used to. Shadow QE has been going on. All right, let's take a look. What are some of the big movers here today? Yeah, some of the bigger movers: silver, gold miners, XLP with a nice rebound. If you guys were buying some of that at the end of last week, that's the way to do it right there. Healthcare as well. Utilities. There was a buying opportunity. I hope you caught it. Let's see here. Bitcoin miners. Bearish trend. Hmm. Yeah, silver, gold miners. Those are the big things that are up. What would I say is the opportunity of the day? Hmm. Hmm. There's some emerging markets that are having a little bit of a correction here. Check out South Korea, Japan. Japan's kind of losing some strength, though. Probably wouldn't jump on that one very quickly. Turkey, Mexico. Yeah. Yeah, interesting. There's definitely some things to buy here, but you want to be a little bit careful because of the VIX accelerating, and I think it just closed above 20, right? Yeah, well above 20. Any thoughts on today's dip in Mexico? Yeah, it's a dip to buy. Thoughts on lithium miners? Yeah, I mean, it's come down a lot. Um, volume has dropped off here on this bounce, which is technically a bearish divergence. So I'm not in too much of a rush. Excuse me, to buy this here on this bearish divergence, but it's still on the list. S&P 500 ranges for today. Let's take a look at the SPY actually. $696, $675. It's approaching the low end, but you know, the light in the background is yellow. Just even though it looks like it's green, it's not green. All right. Well, we're going to go ahead and wrap it up there, everyone. I appreciate everyone for joining. As always, if you guys appreciate this content, leave a like, share with a friend, and we will catch you in tomorrow's daily macro update. Bye, everyone.